misconception is when transactions should be dated. So for example, say you have a cell phone bill and the bill date is December, but you don't pay it until January. When do you record that expense? What date do you put on the entry? If you answered December, you are correct. You want to put the date of the transaction, the date the expense was incurred. You want to use the bill date, not the paid date. This is called accrual accounting, and it's the way that we put together our financial statements. To illustrate this, consider maybe a contractor who is finishing somebody's basement, and he worked on it in December and he finished it in December, and it cost him $4,000 in materials, and then he turned around and he billed the client $7,000. And he did the work in December, he billed them in December, and then they paid him in January. If you were to ask that contractor, how much did you make on that job? Would he say, oh, well, in December, I lost $4,000, but in January, I made $7,000. He wouldn't say that. He'd say, on that job, I made $3,000. That's the concept behind accrual accounting. When you date the income and the expense, the date that they were incurred, it is a better representation of how the business is performing and when it owes its money and so on and so forth. So make sure you put your bills and your incomes into your bookkeeping as the date that they were incurred, not the date that they were paid. So another question that comes up often is, should a business have its own business bank account? Now, in the case of a corporation, absolutely. Remember, a corporation is a separate entity, like your neighbor. Can you imagine sharing a bank account with your neighbor? Can you imagine every month getting together and trying to sort through all of the different transactions to figure out which ones were your neighbors and which ones were yours? And say you both brought about 75% of the receipts and you sort of had to remember and guess the rest of them. Goodness me, that would take so long. Maybe you just hire somebody else to do it. Well, now somebody else has to go through all of these, and it's going to be even less accurate, and it's going to take them so long. So, as you can see, it's pretty obvious that a corporation needs to have its own corporate bank account. But then, if you're not incorporated, is it mandatory to have a bank account dedicated to just the business? Well, it's not mandatory, but it is smart. For starters, it makes CRA reviews and audits a lot easier because they might want to see a copy of your business bank statement and you'd be able to send that to them. And of course, if it was also your personal bank statement, there'd be more things for them to look at and go through. On a side note, there are some audits called a net worth audit if they don't really feel that the record keeping has been done thoroughly or properly. They do say, no, I want to see all your bank accounts. So just put that out there. But in general, most of the time, they're just reviewing to make sure everything's done right. And if you've just got your business bank account, it makes it go a lot easier. But everybody's situation is different. So, for example, I have a friend, he's a graphic designer. He has really low overhead, really low costs. He's in the service industry. And he actually uses an Excel spreadsheet to keep track of all of his expenses and all of his income. And that's fine. I mean, we'll talk about the benefits of having a business bank account in a minute. But at the same time, if you're a smaller operation, I mean, it's not mandatory for you to have a business bank account. Everybody's situation is different. I still feel that about 90% of small businesses should have one, though, because it's smart. I mean, what are the benefits of having a bank account for your business? Well, first of all, it looks more professional. This isn't the most important reason, but it's out there. I mean, it's much easier for a client to write a check to ABC Company than it is to, Joe Blow. So it looks a bit more professional. But another really great reason is Now, if you have a business bank account that is only used for business transactions, now you have a concise list of all the transactions for you to check against to make sure you've entered in all your receipts and incomes properly, because you will end up losing receipts. It does happen. So, for example, a bookkeeper, if they know that your business bank account is 100% used for business only, and say you've got a few missing receipts here or there, well, they can confidently put in those expenses knowing that, well, they only use this for business, so I'm going to go ahead and I'm going to claim this. Now, it's very important, though, to note that this is just to try and help make sure that your financials are as close to reality as they can be. Because if you are ever reviewed or audited, the line on a bank statement saying you spent money somewhere is not good enough support. Same as we were talking about that debit receipt. Doesn't say what you bought, or, if there was any tax, or, what the product or the service was. So a line on your bank statement will not pass an audit and review. Also, if you don't use your business bank account for only business transactions and you put in a lot of personal transactions, well, a bookkeeper is going to have to make some calls, make some decisions. Should they claim this expense or not? So it's important to find out what your bookkeeper does, because some bookkeepers are like, nope, if I don't have a receipt, I'm not claiming it. And I mean, that makes their work audit proof. It makes it ready for CRA, and it's a lot safer for you. So if you ever get audited, you'll pass. So it's a much lower risk for both them, the bookkeeper, and you, the business owner, for them to do it that way. But at the same time, it's not a close representation of reality. So, a different way of bookkeeping is a way to say, all right, I'm going to assume that this is a business expense and risk that if I get audited, I'm not going to be able to claim this expense, and I might have to pay some money and some interest. So just some things to keep in mind. Now, I keep saying again and again, keep it clean. Make sure only business transactions are in your business bank account. And you can see all these fantastic reasons for that. And again, I just want to point out the efficiency of it. As a bookkeeper, a bank account, a business bank account that is a mix of personal and business, it's like wading through molasses. It slows you down when you're trying to enter your books. And either you're getting slowed down or your bookkeeper's getting slowed down. Your time is money, or you're paying somebody else to do it. So yeah, if you need money from your business, take the money from your business. I mean, that's fine. But don't do it in like little receipts here and there. Take a chunk of money, like transfer $1,000 into your bank account and just use your bank account when you need it. So anyway, just a tip and trick to help you, like I said, be mindful of the bookkeeping, make it easy, make it efficient, and make it accurate.